Hello and welcome back to another video. My name is Brandon Watson. Today I have another stock that someone appears to be buying large amounts of shares of. As volume starts to increase on this barely a year-old stock, we're going to see if ticker symbol DADA has what it takes to reach its 43% predicted price target. So let's jump right into it. Ticker symbol DADA, or Dada Nexus, operates a platform of local on-demand retail and delivery in China. If you're familiar with Shipt or Instacart, where you as a customer choose to buy a bunch of groceries through an app and have someone deliver those groceries to you within a few hours, then you'll be familiar with the business model that Dada Nexus incorporates, which falls under two names: JDDJ, which is their local on-demand retail platform for consumers, retailers, and brand owners, whereas their Dada Now is a local on-demand delivery platform for merchants and individual senders in various industries. Part of what makes this interesting is the fact that one of the single largest holders comes from JD.com, who go under the ticker symbol JD. According to this article on MarketWatch from March 22nd, JD planned to purchase 800 million in shares at a price that is equivalent to Dada's March 19th closing price of $29.30. This, according to MarketWatch, translates to about a 51% stake in Dada's issued and outstanding shares once the transaction was to be complete. Now, if we take a look at the charts, we'll see that when this article was written, Dada was trading between a small $30 to $33 channel that eventually broke to the downside 3 days after the announcement from JD about the $800 million buy order. Within less than 2 months, price retraced back to its IPO lows, even making new lows from the then all-time low of $20 to the new all-time low of 19.53. I'm assuming this is because JD wanted a great price for their shares, regardless of the fact that DADA was coming out with positive news after positive news all throughout April of 2021 on deals of partnerships and growth. And if you're unfamiliar with who JD.com are, then just know that it's considered to be one of the two massive businesses to consumer online retailers in China, similar to Amazon when comparing transaction volume and revenue. Digging into the charts a little deeper, we can see that price is starting to retest the 200 EMA, which is good news. Typically anything over the 200 EMA is considered to be in an uptrend, though that doesn't mean that price will always stay above it. What I like about it though stems from several key factors, the least of which are the three indicators at the bottom, which are moving in a relatively bullish fashion as the RSI slopes upwards along with the MACD and the TTM squeeze above the zero line. Again, I don't ever really place too much faith on those three, but I know others use them, and it also helps make the chart patterns form nicely together on my 28-inch monitor. The other key factors are the sloping 9 and 25 EMA, which are starting to test into the 200. If we can get the 9 and 25 to fully cross over the 200 EMA, then that could potentially spell good news for the overall trend to head higher into the expected price targets. Combine this with rising volume ever since the $800 million announcement as price dipped into lows and starts to rise back up, we may be at the beginning of a great move upwards. I mean, the volume for the last several days has been rather nice, even though DADA reported losses in their most recent earnings report, along with a revenue beat of 2.7%. If the most recent earnings report meant anything though, then I'm sure price would be falling past all-time lows. Though, here with DADA, analysts held steady with a 43.37 price target, which leads one to believe that with all of these factors being considered, DADA might actually get the attention and volume to push the share price up into the $40 range. Currently, as price sits at 30.16, a rally to the average price target at 43.37 would equate to a roughly 43% increase of your investment. Then, at that point, assuming Dada is still upping their game all along the way and still coming out with good news, then maybe share price can start to reach for all-time highs at $60, thus providing a 100% return on your investment from the current price. If everything goes well and price stays above the 200, then I would like for the share price to act in the same regard as my ATI call out I made back in November, as price popped over the 200 and trended 83% higher into the predicted price target of $25 a share. Though, remember that DADA has nothing to do with ATI. This is just something I want to see happen. That would be the ideal situation and the easiest play. But this is a stock market and nothing comes easy unless you're lucky, and lucky isn't sustainable. So how do we go about scaling into DADA? Well, the first thing you're going to want to do is draw out your support and resistance levels. Without that, you relatively have no idea where you are at in the trend. Oftentimes, it's smart to only buy near a support, as theoretically you would want the price to bounce off the support and into higher levels. Because of this, I always work my way up from the bottom, starting from the far left of the chart to first find my support, and then I'll find my resistance after. Then, as we have all those set and drawn up, we can see that the closest support sits near 27.70-ish. I say 27.70-ish because price will never make 100% exact bounces from old levels, but will rather move slightly below or over that level to confuse the average retailer who thinks price levels are exact, and thus set their stop losses as such. Price levels are never exact, and large institutions will always take advantage of anyone who thinks they are. So, if we move to the 90-day 1-hour chart, we'll then see that ever since the highs at $47, prices dropped below the 200 EMA and got dragged down into the 20s. From there, price then bounced off the $20 level into a past resistance near 27.5 that comes back from July of 2020. This all the while happens as price trends nicely above the 200, bouncing and consolidating every time price comes near it. This is where you want your entry to be. As price comes down and dips to the 200 EMA, you can then use the 200 as a sort of a stop loss. Remember that we want the price to stay above the 200 at all times. Can the price come below the 200 and retrace back and then head higher? Yes, absolutely. But look, what happened last time price dropped below the 200 EMA on the 1-hour chart? Things didn't look good for several months, and anyone who bought near 47 could have gotten stopped out and bought back in at $20. Now, I'm not saying that price will drop below and stay below the 200, nor am I saying that the price will always stay above the 200. But what I am saying is that you can use it to your advantage and as a rule of thumb. Then, if you move to the 5-minute, you can drill your entries down even further, as I typically like to buy on the dips to the 200 as price confirms and stays above it, thus crossing the 9 back over the 25. I always like to see all the EMAs crossing and staying over each other, with the 9 being over the 25 and both the 9 and 25 over the 200. Without those three occurrences, your shares are either sitting in consolidation or in a downtrend, neither of which will generate money for you when swinging shares. All it's doing is wasting time. Last bit before we move off the 5-minute chart is this large spike in volume for 1.96 million in shares. This is rather interesting to see and can't be interpreted as a good sign. With average volume sitting at 1.33 million shares traded per day, this large 5-minute spike for over twice the daily average shows that someone or some multitude of people are starting to move in, and they don't want their orders to show up on the scanners of the algorithms or momentum traders. If more attention were being brought to their positions, then it would not be any good for them as price rallies up and regular traders pile in. I would prefer to see whoever is scooping up these shares to finish building up their position so that price will always sustain itself higher rather than retrace back to the breakout point where investors can either reload the boat or decide to get out for good, assuming any fundamentals change. I don't like retracements and reversals and would much prefer my shares to stay on the moon, though if price escapes up and overextends itself, then it'll more than likely be best for you to take your profits and get out. Overextensions are great for quick money, but never great for sustained growth. Anytime you're caught in one, you should be extra cautious of what your move is going to be. So where do I see DADA going to in the future? I would have to say I would agree with JP Morgan, who gave Dada Nexus a $40 price target. From where we are at today, that would represent a 33% increase, and quite frankly, I think with all the large volume coming in lately, Dada might have the potential to stretch those legs. So let me know in the comments below, are you going to look into Dada Nexus further, or do you have some other ticker in mind? I always love everyone's feedback, and I hope you all take care and have a great weekend.